In this lesson, we're going to talk about how to identify directional bias of the market and how to locate high probability setups. When I'm analyzing the structure, I can see the downtrend played out with the break, few pushes to an extreme. The supportive indicator is completely flat. Right now, the bias is bearish, but very slightly. It is not strong enough for me to be looking for wider downtrend. So what I'm going to do, I'm just going to be paying attention to this short-term consolidation. You have a break. Most breakouts out of trend ranges will fail, and this right here is just a smaller version of a trend range. Two-legged pullback, and we have high-low confirmation setup of the two-legged pullback and a failed breakout. Is this a good step to take? Your idea to go long is not bad, but because there is slight bearish bias, we traded down overall. I would regard this more as aggressive entry, but shortly after we have a new low, I'm going to reset the count. First entry short, pullback, second entry short failure. There's going to be break above this bullish bar. And this right here is a failed second entry short, above EMA, back into the trend range, and because failed second entry short is always stronger trap, right now we have a sign, green light, that we can take this high probability setup playing the trend range rules. I'm going to redraw the short-term uptrend that actually resembles spike and a channel. Now we can see the resistance is coming into play again. We cannot sell because this is an inside bar and we have uptrend in play, but when the channel is this tight, when the trend range is this tight, spike and channels overall may not fully get new extremes, especially spike and channels, because we trade down into this, the resistance is holding, so something is telling you the market's probably going to go lower because the range is tight. But there is no clear break and new high, so I cannot go short just yet. However, shortly after we have new high, first entry long, second entry long failure, and now is really tempting off of these highs. It is more advanced because if you're an advanced trader, you can sniff out what's going on here. You're playing the range rules. It's not going to get new high. The resistance is holding. You trade it down. Decent high probability setup. And the market started trending lower again. So what I'm going to do, redraw brand new short-term downtrend. And I'm going to following this trend line rule. This was a significant push down. And we need new extreme following the trend line rule. I cannot sell, however, right now. I want to see two-legged pullback at the key entry point, at the EMA. I want to take a setup at the key entry point. Downtrend is new extreme. While I'm waiting for my second entry, you can see how sideways the market is. So I'm going to follow the short-term consolidation. And we have short entry right here. Technically, this is second entry short, but because I have so many matching lows and the support is here, you have to reset the count. And this is just first entry short. Now, had it at least been higher here to this resistance, I have no problem selling here. Actually, I like it. But with so many matching lows, first entry short. Now, downtrend is new extreme. Once again, tempting setup to sell. It just feels like it didn't correct enough. Tempting setup context-wise, but feels like a one entry short only. And market continue working lower. We have break and new extreme. So right now, I'm going to be paying attention to how the reversal to the upside is going to look. Because after breaking low, we can expect correction reversal. Or sometimes trend continuation if the reversal is going to fail. So right now it's looking good for bulls. We already have a break and new extreme and we push below EMA. So this is not good for bulls at all. And we have resistance coming into play. Now the push below EMA is a lot of times confirming the downtrend continuation. Now when you have break and new low, you definitely cannot sell the very first second entry short. If you expect continuation of the previous trend, you want to see the lower high confirmation setup or double trap. And because uptrend played out, you push below EMA and we have a lower high confirmation setup. I like this setup. This is very common setup for a situation like this. Lower high after second entry short, where bullish reversal attempt will fail. Breaking new high, push below EMA, right at the EMA, small bar, great entry. Now we have another second entry short, but problem is the correction is too tiny. It's getting too sideways. Now when I'm observing market like this, and I can see so many rejections of the EMA, I can see right now that there's case to be made for wider channel because reversal is not happening. Market keeps going lower, EMA keeps holding. So if I'm going to draw a wider channel, it actually looks decent. I have nice confirmations off of these lows. It fits nicely off of these highs. And market continued to work lower. So even though it worked here, I don't think we can sell this setup. We have strong push above EMA. Uptrend is in play. You can see every single time I'm drawing these short-term channels because once you break new high, that's a good sign for me that I can consider selling again. Now we have another second entry short. Problem is there is only one leg working hard. There can be second leg up. Two new extreme. EMA is flat. But if you're a developing trader, it is not a bad setup to take a chance. I will actually mark it. I'm not a fan of this setup personally, but I can see the reasons why you would like it. But because we pushed above EMA, there is no new high. This is just a first leg. There can be second leg. Now, once you see the consolidation getting so strong, EMA in all these bars, you can even exit at break even. I'm definitely not short anymore because it is just too flat, too much congestion, but you can actually get out of the break even or even more because market really gave you a chance to exit. Right now, it really tells you after such a spike, the bulls want to see the new extreme. This indeed happened. First leg, break, second leg. Market moves in pairs of twos. Our channel is holding. Problem is, I cannot sell below bull bar. And the double bar entry is just way too big. Can we get lower high confirmation set below EMA? That would be great when something is wrong with our confirmation of the channel. Push below a lower high or false second entry long. That never form, market just drop lower. Now, we're correcting, and right now I'm going to draw wider channel to the upside. Why? Because EMA is flattening. Notice how empty the bottom of this channel is, and it is starting to go way too sideways. The bearish pushes lower are smaller and smaller and smaller. It's getting way too wedgy, it is too sideways, so it is resembling a trend range more. For this reason, I'm going to be expecting this market to correct a little bit stronger. I'm not buying, however. Okay, market is trending to the upside. There is no setup regardless to either side, so we can go fast. Now I'm going to redraw the short-term uptrend working higher. We're breaking below EMA, and now you have important decision to make because we have conflicting variables. This uptrend doesn't fully have new extreme, but the main channel down needs new low. Downtrend is in play, and we are coming off the range highs. Now, the reason why we want to see break any new high for this uptrend is not because we want to go long, because we want to know when we can be aggressive selling. And what do you do in a situation like this when you have conflicting variables? Which channel is going to get new extreme first? Focus on the main bias. Bigger patterns take precedence. Don't worry about new high. Worry about bullish trap and getting a new extreme to the downside. So you're thinking bearish, you trade it down, and there's resistance. So only reason why you're thinking about this uptrend getting new high is not to go long, is because you want to see break a new high, and then you know you can be aggressive selling. Because there is no break a new high, it's hard for us to be aggressive selling. For this reason, notice we have new low, first entry short, second entry short. Great setup. A lot of bulls must be trapped. But because there is no break new high, we cannot fully tell if there's going to be a regular retest. So had there been break new high, we can sell. Second entry short, resistance bounce. But it is a bit more aggressive. It worked regardless, but unfortunately, we cannot take. And now it's getting obvious. What is happening in the market? We're coming off to range highs, all the way down to these lows. This leg down is new extreme, and the main downtrend is new extreme. So what I'm thinking about, second entry short at the EMA. New low, first entry short, pullback, second entry short, great single bar. There is a bearish daily bias, two channels need new extreme, and you're coming off the range highs all the way down here. EMA keeps holding, great tier 1 single bar, absolutely gorgeous. Second entry short. I took this setup myself. Great entry, EMA keeps holding. It even offered you a lower high, which normally is even better entry, but there is a horrible tail at the bottom. For this reason, it is more aggressive. Had there been no tail, just one bearish body, this would have been easily red hyper out this setup, but because there's a tail here, you need to use deeper limit order, double rejection at the EMA, great context. And look at the gigantic runner you could have had. And you can see how following the main bias and using price action rules and combining everything in price action, key entry point is holding, great high probability setup, absolutely textbook. And because notice how far the market is trending lower. This is not what you expect after breaking new extreme, and sometimes when the push down is this strong, there can be even secondary channel, something like this. I'm gonna copy, put at the bottom. Yes, this explains it why we're working lower. We break above EMA, can we get lower high? We cannot, and even this channel had break a new extreme. There is no good short setup because you're above EMA. You need something below EMA, lower high confirmation setup that never formed, but all channels in price action played out. So now we can expect some stronger correction or possibly bullish reversal. And push above EMA is definitely looking good for bulls. Uptrend played out with the break. Move to new extreme. Now this is where the bias is difficult to read because we traded down the entire day, but right now channels played out and we're above EMA. So this is area of development where it takes time for a brand new market structure to establish. However, every single time I see flat EMA, I can start to predict some possible trend range like this, but I don't see any good setup, no good bias. Trend range is established. I'm going to draw short-term uptrend working higher like this. Uptrend is new high, but we cannot sell uptrend in play. We cannot go long below EMA. So this is just area of development. Nothing really fits. We have a break-in new high finally for this uptrend, push below EMA, and we have a second entry short, new low, first entry short, second entry short, great signal bar below EMA. Now we're coming off to range highs, but there is definitely a series of high lows. There is case to be made for possible wider uptrend like this, but I can definitely see reasons why someone would short here. Second entry short off the EMA, I'm definitely going to mark it because it is once again not a horrible setup to sell. I can see reasons why we're coming out to range highs. Problem is there's so many higher lows, empty room here. You know, it looks like a weak uptrend is developing. You would have had losing trade, but that's no problem. And right now the uptrend is definitely confirmed, so I can redraw a brand new channel working higher like this, because I need to ask myself a question: why are we trending higher like this? There has to be some pattern. Now we have small overshoot here, or there's also a possibility for me to redraw channel from this swing right here, because this is where the uptrend really started. We traded up into the strength range, and this is really where the uptrend started from, the strong leg. So I'm going to draw this. It actually fits well. I'm going to reset the count at each new high, first entry long only. New high, first entry long. I can see we have small trend range. Second entry long, but I cannot go long. This downtrend doesn't have new extreme. There can be second leg down. We are in the middle of this trend range. I want to buy a little bit lower. No new low. In the middle of this trend range, a little bit congested. No entry. And now we have triple test. Bounce here, bounce here, bounce here. And it's confirming our channel and a small support. And this is a decent setup. If you're not sure, you're waiting for high low above EMA, but this setup is definitely decent. Now, quick easy scalp. There was no high low. Market completely reversed down, so I cannot argue with the market. I'm gonna adapt brand new downtrend, already break and new extreme. So I cannot think about selling if we're correcting to the EMA because we have a break and new low. So I cannot sell. Notice new low first entry or second entry short. I'm not interested because downtrend already has a break and a new extreme. And we actually have new low first entry short pullback, second entry short failure above EMA. Fell second entry short. This uptrend right now has a chance of getting new high because downtrend played out. Felt second entry short. Oh, I can see it is way too late, so you can't really take it, but from educational perspective, decent fell second entry short, and market is about to close. We tested a new high, barely double top. Very nice trading day overall. This is the main picture. Remember, follow the main bias. Don't worry about uptrend getting a new high here. Selling high is always the best option. When you have clear bias established, you just want to make sure the correction plays out, and you're going to take a nice high probability setup at the key entry point, which today we had quite a few setups on the way down. Then we had a long area without a decent setup, this area of development, and few setups to finish the day. It is definitely normal for market to form pullback, for there to be a noise. For example, when you take the second entry short, notice there is a big bullish bar right afterwards, and you really shouldn't feel no emotions when you're sitting and holding the trade. You shouldn't be panicking. Everything is part of trading. There can definitely be pullback. There can be some noise. Not every single time your trade is going to go straight in your direction, such as here, big bullish spike. So you need to go through the analysis you did before you enter the trade and say to yourself, the trade is either going to work or it won't. That's what trading is about. You just have to collect the information from the market. You have an edge on your side, but you need to remain calm, objective, and don't have emotions in the game. You're going to take the setup. If you see there being a little pullback, don't panic. Don't move the stop loss instantly, trying to cut the losing trade, trying to move it to break even, because what will happen, you will monkey with the stop, then you will get stopped out at break even and you will see it go exactly where you thought it was going to go. So if you cannot handle the heat, just don't look at the trade, walk away. But you really need to train yourself to not feel anything, scale down if you need to, trade extremely small, because this is part of trading. Everything is part of trading. You're going to have losing trades. There's definitely going to be a trade where you're going to have to sit in a trader for a long time, and it will cause you to second guess yourself. You cannot second guess yourself. Go through the reasons why you entered the trade. I always do this. You can see it in my live videos. I always go through this out loud. Where's the setup? Where's the key entry point? What is the bias? Am I reading this correctly? And if it's all matching, then you have nothing to worry about. It's going to work or it will fail. That's all part of trading. You'll get it back on the next one. So I hope you had a good trading day. I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.